Hi friends, we are looking at Apar Industries' first quarter results for FY27 and this is genuinely interesting one. The company has beaten its own profitability guidance by 50%. Let us begin with the headline numbers. Revenue for Q1 FY27 came in at 6591 crore, up 29.1%. EBITDA is at 814 crore, up 62.7%. EBITDA margin is at 12.4%, up by 2.6%. Net profit was 467 crore, up 77.7%. Net profit margin 7.1%, up by 1.9%. On the face of it, an excellent set of numbers. If you compare with the last quarter, instead of last year, the revenue is flat, but EBITDA is up 39.4%, net profit is up by 84.2% from 254 crore to 467 crore, and a jump of 84% profit. Same revenue, nearly double the profit. So this was a margin quarter rather than a growth quarter, which brings us to the natural question, where did the margin come from? Answer is largely the oil division. Oil revenue is 1701 crore, up by 34.7%. But oil EBITDA rose from 105 crore to 329 crore, 214% jump. That's 46% of the profit coming from oil division. Now here is a part I would ask you to pay close attention to. Oil volume actually fell by 13.7%. EBITDA per kiloliter went up from 7,004 in Q1 FY26 to 25,482 in Q1 FY27, roughly 3.5 times on lower volumes. To the company's credit, they explain this quote openly. When ICE gas oil price moves up, selling price rise and margins expand. And as they themselves point out, it works on reverse as well. So a meaningful part of this quarter's profit is a price cycle gain rather than a permanent setup. Moving on to the largest division, conductors delivered revenue of 3,338 crore, up 19.9, but volume down 6.7% year on year and down 18% sequentially from the quarter on quarter. So all of the revenue growth has come from price and product mix rather than from the more product going out of the door. There is a genuine bright spot here. Premium product mix came in at 50.3% versus 43.7% the last year. Even so, the divisional margin slipped slightly from 9 to 8.5%. Pending order book was 10,190 crore. New order received this quarter at 5245 crore. Cable division revenue up 29.5% to 138 crore. Also up 36%. Pending order book is at 1925 crore. So the company is comfortably beating its profitability guidance while falling short of volume. And you will notice that this is the same pattern we saw in oil. Price and mix are doing the work and volume is not. One item worth keeping an eye on. US revenue 9.1%. Exports come down by 13.7%. So to sum up, this was a very strong quarter on profit achieved without any volume growth at all. The margin guidance is being beaten by such a wide margin that the real question becomes how long it can hold, particularly in oil, where the company itself links it to oil prices. On the other side, the order book suggests the underlying demand is very much there. For me, volume is the number to watch when the Q2 results come out. Please do remember that this is only a summary of company's own disclosure. It is not an investment advice. And I would encourage you to do your own research before making any decision. If you found this useful, do consider subscribing. Thank you for watching.